In this video, I'll be discussing the difference between withholding tax and value-added tax. The difference between these two forms of taxes may appear obvious and even simple to some people, but I've also come to realize that for a lot of people, there is still a bit of confusion on which is which and who bears the obligation to remit either of these taxes in a transaction. Now let's start with withholding tax. Withholding tax is advance payment of income tax, and it applies to certain forms of payments including dividends, rents, royalties, commissions, and professional service fees, and other forms of payments that are specified in relevant tax laws and the withholding tax regulations. And the way it works is that the person who is making the payment is the person that is obligated to deduct and remit the tax to the relevant tax authority. So if we're to take, for example, Peace, who provides legal services to our clients, our client would be the one that will be required to deduct withholding tax on the professional fees that will be payable to Peace. The client would deduct and remit the tax to the relevant tax authority. But because this tax is actually on account of Peace and is of course from the income of Peace, the client will be required to issue a withholding tax receipt to Peace, with which Peace can then claim a withholding tax credit from the relevant tax authority. That tax credit can be used to reduce Peace's overall tax liability at the end of the year. So if Peace had suffered 100,000 naira withholding tax in the year, and her ultimate tax liability at the end of the year is 1 million naira, she can claim a credit of 100,000 naira from the tax authority, which would then reduce her tax liability for that year. Now let's go to value-added tax. Value-added tax is a tax that is chargeable on the supply of all goods and services, except goods and services that are expressly exempted or zero-rated. And the supplier is the one that bears the obligation to charge VAT, collect the VAT, remit the VAT, and of course file VAT returns. And the purchaser is required to actually pay the VAT to the seller. So let's take the example that we use in the withholding tax scenario, the provision of legal services. Now, because it is the supplier of services that is required to charge VAT, Peace in this case would be required to charge VAT in her invoice to the client, and the client will be generally obligated to pay the VAT to Peace, who will then remit the VAT to the relevant tax authority. So in this transaction, while the supplier of the services bears the obligation to charge, collect, and remit VAT to the relevant tax authority, the client, who is the purchaser of the services, is obligated to deduct withholding tax from the professional fees that have been paid to Peace and to remit the withholding tax to the relevant tax authority. Two different parties, two different obligations, two different taxes that would apply in the same transaction.